Welcome to BigONE Weekly News Update. I'm Gavin. Last week, global financial markets experienced notable turbulence as geopolitical and economic pressures intensified. In the cryptocurrency space, Bitcoin, BTC, posted modest gains, closing around $85,180 with a 1.2% increase. Solana, SOL, outperformed significantly, rising 6.9% to $139, while Ethereum, ETH, dipped slightly by 1.1%, closing at $1,597. Traditional markets were mixed. The U.S. stock market suffered weekly declines. Dow Jones fell 2.66%, and AMP with tongue sticking out 500 dropped 1.5%, and the Nasdaq lost 2.31%. In contrast, Europe's stock 600 gained 4%. U.S. Treasury yield slid, with the 10-year benchmark rate falling 17 basis points to 4.32%, while gold climbed 2.56%, reflecting investor risk aversion. Macroeconomic uncertainty remains at the forefront, driven by ongoing tariff negotiations, concerns over the U.S. fiscal debt ceiling, and the Federal Reserve's hawkish monetary stance. Fed Chair Jerome Powell's comments on the unexpectedly strong economic impact of tariffs stirred concerns about potential stagflation. Tensions escalated further as former President Trump threatened to dismiss Powell, introducing fresh volatility to the markets. Despite these headwinds, Bitcoin continues to outperform U.S. equities, buoyed by strong trading volumes across centralized exchanges, even amid broader altcoin market weakness. Notably, the SOL/ETH trading pair reached a new high, indicating a strategic rotation by investors from ETH into SOL. Looking ahead, markets remain cautious. There's speculation around the sustainability of the Fed's independence and whether a shift in U.S. leadership could prompt deeper intervention in financial institutions, including tech companies and even universities. These developments, along with upcoming earnings from major firms like Tesla and Alphabet, could further sway investor sentiment. In the bond market, pessimism is growing. Once unimaginable, a 10-year Treasury yield above 5% is now being considered by the most bearish investors. Meanwhile, the DXY index fell below 99.00 for the first time since April 2022, signaling weakening dollar strength. Amid fragile macroeconomic conditions and equity market volatility, the appeal of crypto assets as decentralized, sovereign alternatives is poised to grow. As the global financial landscape continues to shift, investors would do well to monitor both macroeconomic trends and crypto market resilience. The week ahead features key data releases including US PMI, consumer sentiment indices, and the expiration of US crypto futures, all of which could set the tone for short-term market movements.
Join BigONE today and take advantage of the growing cryptocurrency market.